Hi, and welcome to the HODL Boomer podcast, the Bitcoin podcast for seekers. Who are seekers? Well, they're people like me, people that maybe got into Bitcoin a little bit late, or people that just want to understand more without all the hype and jargon surrounding Bitcoin. They want to know what this asset is all about. Hey, before we go any further, let me just share our sponsor. As you might have guessed, it's HODL Teas. And we just would like to ask you to please follow and share. This is the website you can see right on the front page. It's not all about the merch, it's about the mission. We do have merch, of course, that you can purchase, and you can certainly support us that way, and we would appreciate it. But more importantly, there are blogs. There are the HODL Boomer blog, the Bitcoin Way blog, a lot of our favorite videos. And there's also a place here where you can see the HODL Boomer podcast, this podcast, and replay them at any time. Let's jump into this week's episode and begin to talk a little bit about Bitcoin and investing in Bitcoin. What does it mean when we say, I want to invest in Bitcoin? We're going to cover three layers in this podcast pretty quickly. First, is Bitcoin an investment? Secondly, can it be an investment? And then finally, what's maybe the better way to think about it? I want to reassure you guys, we're not going to fill this with jargon. We're just going to explain it simply. If you're still trying to figure this out, that's exactly who this episode is for. So thank you. Bitcoin is an investment, right? You can invest in it and hope for a fiat return. If you invest in Bitcoin, you expect to be able to sell that Bitcoin a little bit later for a bit more money. I bought it $30K, now it's $100K. Yay, I've made money. That's valid, but it assumes the dollar is the unit of account. It assumes that fiat is the finish line. Using the HODL Boomer lens, we don't expect the dollar to be the final unit of account. We expect that the Bitcoin success is not measured in dollars. We measure it in purchasing power, in sovereignty, and in the principles underneath Bitcoin. The analogy is, do I buy a house for an investment, or do I buy it to build a life? You know, a lot of us, myself included, have been caught up in this starter home and sell and buy something better, sell and buy something better, sell and buy something better. All my life until now, I'm in a house that I really don't need. I really need to sell, and I need to get out of it. So did I buy the house because it would make my life better? Or did I buy the house because of a mismanaged expectation for the investment that it was? How many times have you sold your house, sold the quote-unquote starter home, just to get a better home? And did your life change for the better because of it? Maybe, maybe not. So what's the deeper problem? The deeper problem is fiat, by its very nature, is a system of managed scarcity. What do I mean by that? It's managed by the people closest to the money printer. There's a term for that. It's called the Cantillon Effect. And it means that those closest to new money, those closest to the creation of the new money, benefit first. Banks, governments, large institutions. By the time it reaches regular people, purchasing power has already been eroded. And I can explain it to you using a simple cartoon. If you'll allow me, let me share this real quickly. You can see that this effect was named after Richard Cantillon, an 18th century economist. And basically his question was, who gets the money first? Well, central banks, as you know, print money. They're about to print a lot more money. When that money gets printed, banks essentially get the money from the central bank. They now have control of it, and they say, cheap money, cheap assets, buy, buy, buy. The investors, the people closest to the bankers, they're the people like they run huge businesses, they run banks. They get the money second. And while there's already been some inflation, it's still pretty cheap money. And as it works through the economy, and I'm putting this very, very simply, but the people at the end of the road, the people like you and I, the people using the money, they're the last receivers of the money. And everything is a lot more expensive. Just look at gas prices these days for a good explanation or a good feeling for what exactly is happening with the Cantillon effect. So, in short, when you are in the business of printing money, you have an advantage, and those people closest to you have an advantage. So that's the deeper problem. The money is not static. The money doesn't remain the same value. Because of the Cantillon effect, there's already some unfairness built into it. So the simple version is this. It's like a hot meal. If you can imagine someone just giving away a hot meal. And those people at the front of the line are going to have an advantage over those people at the back of the line. There's ways to keep meals warm, obviously, ways to keep them fresher. But over time, the people in the back of the line have less of a product than the people in the front of the line. Is that to say that the people in the front of the line did something wrong? No, they just happened to be there. They got the food when it was warm, when it was delicious, before it was crusty on the edges. The people in the back of the line were just disadvantaged. Nobody did anything wrong. This isn't conspiracy. It's just mechanics. It's the design of fiat currency. It's the way things work. And we all just take it. We all just get along with it. Savings, I'm going to transition now, in the fiat world are punished. Because of the Cantillon effect, because of the devaluation of the dollar, because of inflation, money you saved last year is not worth as much as you anticipated that it would be worth because it has devalued. The dollar you saved last year actually buys less this year. Debt is encouraged over other savings. The system rewards borrowers, not savers. Wealth is transferred quietly, not by overt theft or it's actually by dilution, really. Bitcoin is the opposite. We know we've talked about Bitcoin as solid money, hard money. It doesn't have masters. It doesn't have a central printer. It doesn't have central banks anywhere in the world. It just has 21 million units, full stop, never any more. It's also borderless, meaning that a seeker in Atlanta has exactly the same Bitcoin as a seeker in Lagos. Same rules, same mechanics, no borders, no intermediary. The money you intend to send to someone else, somewhere else in the world, isn't impacted by third parties being involved. It's incorruptible. The ledger is public. The rules are fixed. No government can rewrite what's already been confirmed. I mentioned self-custody. That's the final piece that you've got to pay attention to. Your wallet held by you in self-custody, meaning not living on an exchange, you holding your wallet, you holding your keys, you're deciding what to do with it. That's really the magic. You're answerable to no one. You can send it to whom you want to send it to. Period. No intermediary. So how do we advance this? How do we build using this Bitcoin standard? Well, if you've actually gotten to the point in your research about Bitcoin where you think it's got some validity, but you still have a couple of doubts, you're in exactly the right place. I'm going to suggest that you begin living on a Bitcoin standard first by reading The Creature from Jekyll Island. We've said it again. You'll know just how disruptive fiat banking is when you read that. Next, you can read a book by Saifedean Ammous called The Bitcoin Standard. Then you can read a book by Natalie Brunell called Bitcoin is for Everyone. And I can go on and on and on. There are a lot of very neutral books, very well studied, very well footnoted, that talk about sound money and specifically talk about Bitcoin. So begin there. Then you're going to have a little more confidence in looking into and researching this thing called Bitcoin. So let's talk about starting small. You know, Bitcoin could be, but it is not right now, the means for buying groceries or the means for buying hamburgers or gasoline or spending money every single day. It could be. Let me be clear about that. But to get started, you should just orient your savings ideas, your decisions about money, your ideas about preserving your own wealth, your ideas about moving wealth to your kids and grandkids toward a Bitcoin standard. And you begin that by just transitioning small amounts of money. I almost said investing. It's not investing. It's transitioning to Bitcoin. You should start just by cutting out something that costs you money. Transition that money into Bitcoin. You want to get out of the debt cycle. You want to get out of the habit of taking out loans to buy things that are actually luxuries, things you think you want. You don't want to pay interest, pay off the loan, then repeat. You don't want to buy a new car every 3 years. That's really a waste of money. The Bitcoin standard says save first, spend from your surplus, and continue to build real capital. Now, I know I'm saying something that is going to be really unpopular with a lot of you. And gee, I wish I would have known this a long time ago because I would have saved a lot of money and bought a lot of Bitcoin. I am the guy that bought into the nightmare scenario. Buy the new house, buy a bigger house, buy a bigger house, buy another house, buy a new car, buy a new boat, buy a new everything. Borrowing money is so easy. I got used to saying, I'll never pay off my house. Good grief, I've got a loan at 2%. That's ridiculous. Of course I should pay off my house. Maybe move into a smaller house. There's an idea. We should move our lives toward this Bitcoin standard. Transition our money into sound money. Then we can stop being beholden or victims of the fiat money. We can unpack some clarity in our lives. Think about this. If you convert your money to Bitcoin, you no longer have inflation to impact your savings. Your savings just continue to be there and continue to grow. There's no intermediary deciding whether or not we can transact. There's a little bit of discussion in the government right now around a central bank digital currency. And that is exactly what it sounds like. It's a central bank taking cash and converting it into digital currency. Same dollar, just no more paper or coinage to transfer. It's a centrally managed digital currency. What does that mean? Well, that means all they have to do is flip a switch to turn it off. If you're about to spend money where a central agency doesn't want you to spend money, they can flip a switch and turn it off. I know it sounds ridiculous, but that's exactly what can happen. Now, fortunately, in the U.S., it's just been passed that we can't have a central bank digital currency for years, and that's a good thing. It ought to be forever, no central bank digital currency. But they're being very sneaky. They're within the acts that are being voted on within a couple of weeks. They're actually packaging up a pseudo central bank digital currency. This is going to get a little deep, and I'm going to try to keep it simple. They're using things like monetary instruments that are built digitally, and they're trying to bring those into kind of trade mechanisms in the U.S. It is a central bank digital currency. It's not just owning Bitcoin in self-custody in your own wallet. It is a third-party intermediary. It is. It's not the same as owning Bitcoin by yourself in self-custody. So just don't be fooled. You can, and I think this is reasonable, you can use these vehicles if you want to make it easy to transition a little bit of money into Bitcoin and use that for some daily expense, but certainly not for a savings mechanism. You want to stay away from any intermediaries, people that can interrupt your transactions. You also don't want anyone deciding who you can send money to. You don't want a government deciding who you can send money to. So really, when you think about all this, it's not about getting rich. Get that out of your mind. You will be very wealthy if you get into Bitcoin at some point, but it's not about getting rich quick. It's about holding money in a form that no one can debase. So how do you start? Well, if you're like me, pardon me, and if you're like a lot of other people, you want to start small. You don't want to wait for the right moment because there is no right moment of when to begin. You're not going to have a revelation and say, wow, I've got some extra money. Let me go ahead and invest that in Bitcoin. More properly, you would say, let me convert my wealth to Bitcoin. But you're not going to wake up one morning and realize, aha, I'm going to do this. You should start small. Do away with the Starbucks, the Dunkin', or whatever you get, and convert those dollars on a regular basis, maybe weekly, into Bitcoin and then hold it in self-custody. That way you're going to become more proficient with the tools of Bitcoin, and you're going to recognize how this thing operates. We're kind of running out of time because it's very well thought that Bitcoin could rise pretty quickly from here. We don't know, it could be years. But you have time now to get started. Dollar cost averaging. Buying fixed amounts at regular intervals. Figure out what you can do without. Because really, this is a very unique time in human history where we will be converting to sound money for the first time ever. Think about that. You have the opportunity to convert your wealth to sound money. Then it'll be there for your kids and for your grandkids. If you're a little bit older, like me, you wish you were 30 again, because you can see this coming, and you should have a time horizon that's longer so that you can take advantage of these tools. But no matter your age, whether you're a boomer like me or someone that's tuned into this podcast because you're a little bit younger, but you're still seeking to understand Bitcoin, move into it now. Move into self-custody, then do it again next week and again next week, and repeat this cycle. So if you're a seeker, still trying to figure it out, that's okay. This episode is for you. Get started now where you're at. Small, not big. I should say I am not giving you financial advice. I'm simply sharing with you what I've learned and how my mind has been changed because I've gotten into Bitcoin. So here's the conclusion that I'll just give to all of you. The question isn't, should I invest in Bitcoin? That's a separate argument. That's the wrong framing. The question is, what am I trying to build with my money? What am I trying to do with my savings? If you're trying to maximize the value, then you should look at converting it to Bitcoin. If the answer is more dollars, I need more dollars immediately, there's better ways. Bitcoin can help, but you really have to manage it very carefully. And then you have to worry about, gee, is the 4-year cycle dead, or is it going to continue? You don't want to worry about that. You just want to invest, put it somewhere safe, and know that it's going to be safe over time. Bitcoin is the answer to lasting wealth, sovereignty, and sound money. You're not investing in Bitcoin, you're converting to that new methodology. Sound money is honest money, and honest money is the foundation of a life built on principle, not on debt or inflation or the decisions of somebody you've never met deciding what's going to happen to your money. I could go on about kind of a Christian's view of Bitcoin and how other world religions look at it favorably as well. But ask yourself this question, please. What's my exit strategy? If you have read those books, beginning with The Creature from Jekyll Island, you want to get out of fiat. You don't want to be in that system. But ask yourself plainly, do I really want an exit strategy? You've got to commit to that first. Then you got to commit to beginning to hodl, beginning to bring Bitcoin into your plans and beginning to stack it a little bit at a time. You need to learn about, understand, and accept that the Cantillon Effect is real. So start small. Buy some. Take it in self-custody and repeat. Do it again and again and again. So I'm going to ask you this. We always want you to like and share our video. As you know, probably it's hard starting a podcast and getting people involved, getting people to follow and comment. There's a lot of it out there. But we are doing this to provide value to the community. We think there's a gap there. So we would sure appreciate a follow on this podcast. If this episode has helped you, share it with somebody else that can learn from it, who needs to understand Bitcoin isn't there to be invested in. It's not there as a trade. It's there as a standard that we're converting to. You can subscribe to us on audio as well, Apple Podcasts, Spotify. You can follow us on YouTube at HODL Boomer. You can visit us on HODL and Tees. And we would ask you, stack sats, stay humble, wear the message. Go to HODL and Tees, buy a t-shirt, wear the message. And we love you. We'll see you next time.